Tax write-off equals money you don't pay taxes on.
I think that is a beautiful description. This discussion here irritates me to no end when we get into the discussion of tax write-offs. But do I have your permission here to start talking about cash tax write-offs and why this pisses me off so much?
Welcome, everyone, to this episode of Real Profit, Real Perspective. I am Ryan Bannister, and joined today by my co-host, Connor Malatesta. How you doing, dude?
Man, yet again, I've survived another week to get back to my favorite thing to do every week. The one non-number related thing that I get to do on a weekly basis.
It's so great, isn't it?
I say after we did spend the 20 minutes leading up to recording reviewing our YouTube metrics and all the other numbers. But hey, at least it's not accounting work, right? Which is
It's
boring.
numbers just in different format.
I mean, numbers, it is, I don't know, sometimes I find going through numbers when it's not just, P&Ls and bookkeeping and stuff like that, when you get away from that kind of work into numbers that are more, I don't know, the operational, I guess, or things that aren't purely finance focused, I do find that gets fun and enjoyable because you're, something new to learn that's not just, oh yeah, how do we do a debit and credit for this, and how do we make sure the bank account reconciles, and
Yeah.
Just shoot me.
It is really cool, man. How, I mean, just even the small perspective change from the financial world to like more of a data driven type of view, it makes it so much different.
I mean, I see why people do it for a living. It actually is kind of interesting to start getting into that stuff, particularly when it's your stuff, and when you're looking at how is our product performing, or how are our videos doing. It is cool to see, particularly when the analytics are moving in a positive direction instead of, oh my God, nobody's watching and it's totally fallen off the face of a cliff. And we used to have hundreds of thousands of people watching and oh my God, everything's dying.
Yeah. You said it, man. Well, I know we've got a few things in mind today, specifically centered around taxes. And given that is a sort of a timely subject at this point, I think it'll be pretty useful for our viewers. And I know taxes just itself is really vague. What sort of dive are we doing today?
You worded that so professionally and with great articulation for an intro that I believe we had talked is going to amount to little more than a rant.
I'm trying to build you up here.
Now to give a lecture, and by lecture we mean rant. I can't remember if at the end of last episode if we had teased it or not, but one of the things we had wanted to talk about was kind of misconceptions, particularly around tax write-offs. Because when I'm feeling too optimistic about the state of the world, I will go read Reddit comments. Particularly Reddit comments that relate to anything accounting or finance or business related.
Oh boy. Yeah.
Because sometimes it helps me put myself into the mindset of who am I trying to communicate with at the most base level. And yes, that is Reddit comment is at the bottom. We don't talk about Facebook comments or Twitter comments and stuff like that. That's below the level that I'm willing to dig down into. But I've got a couple favorite things that I've seen. We'll start with the smaller one first, but I've seen this one a lot, is charitable contributions, particularly when you're at the grocery store. People say all sorts of stuff about that. It's wild. Have you seen those when you're online scrolling through stuff and they start talking about donating to charity and people will just start leaving the most baseless accusations about it?
It's every time at the grocery store. Hey, do you want to round up to donate to the children? You do. It's like
I hate children, so
I'm good.
The cashier will look at me. Would you like to donate to stop children's hunger? No. Why do I care? I'm an accountant. We are hated by society. Aren't you a cold person? Yes. Can I have my receipt? I need to write this off.
I gotta go.
This is too much social interaction for me. I need you to stop talking and stop judging me, and I'm going to take my groceries and leave. Thank you.
I'll handle my charity elsewhere.
Yeah. Yeah. Elsewhere. Definitely. Definitely elsewhere. So, one of my favorite things to see when I'm reading online, particularly when it gets into this talking about charity, is usually some variation of the phrase, well, why would I donate to charity just so the business can take it as a write-off? Yeah.
Tell me more.
Oh, you asked. So what I want to do is I want to work through this sentence to see if A, we can understand what somebody might mean by what they're saying.
Mm-hmm.
We already know that if somebody says this, they basically don't know what they're talking about. But let's see if we can try and consult our tea leaves and understand what somebody means when they say, well, why would I donate to the store? Why don't you do it? You're just going to take the write-off. So now I'm going to ask you, what is a tax write-off, Mr.
Ooh.
Bannister?
Oh, depends on who you ask, but I'm glad you asked me. So
You're the professional. I know you're going to give us a good answer. I know I
yeah,
can
right.
trust you.
I'm going to try to do it in our less than 5 words game like we did last week too. So, I mean, I don't know. I mean, it's pretty simple overall. Ideally, I mean, as it relates to business, that's how I'm viewing it in this lens, at least. A tax write-off is anything that's related to the delivery of your service, building your product, or the operation of your business. And outside of that, like as you look in other lenses, I guess, like the IRS through the tax code and Congress kind of combines into that too. The tax code is essentially incentive driven, and they want people, citizens of the country, to do different activities and put money in different places. So they do that and get you to put money in these specific places by giving you a quote unquote tax write-off. So am I hitting it here? Am I going down a rabbit hole?
So for the first time, I'm actually gonna push you a little bit more to say, can you explain that to me like I'm a golden retriever or a small child?
Tax
Layman's
write-off.
terms.
Tax write-off equals money you don't pay taxes on.
I think that is a beautiful description of that.
Thank you. Was that 5 words? No, I think that was more than 5 words. But
are we talking about everything you just said? Because it was just a smidge over 5.
maybe like 6 or 7, yeah.
5 squared, 5 cubed, maybe.
I'll get there one day.
You know, simplicity is, I think, what we all truly strive for. How do you communicate the most information with the fewest number of words?
It is. It really is.
It's very easy to talk at length about things and just bluster and say a whole bunch of stuff, but it takes a true master to be able to communicate information in the minimal amount of information. One of my cats is actually a true master at this because he communicates. He's a tabby cat, and he communicates entirely through grunts. So, hmm, 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 hmm. And that's it. Not even meows. He just grunts. And I have, honest to God, noticed that I have also incorporated those same sounds into my lexicon.
Men communicate.
It does. Let me also my camera. Come on, adjust.
Yeah,
Thank
and it
you,
reminds me of even my well, he's now almost 2 years old, but so he uses words now. But my son for a little bit was solely communication through grunts, or crying. So noises are pretty powerful.
Efficiency of communication is truly the unfortunately, your son there is getting more inefficient as he gets older, as he transitions from grunts and cries into full blown,
You
usage of
know,
words, and then too many words, and then words where you don't understand what he's actually trying to communicate, and you're like, you're in these damn teenage years, and it gets out of hand until they circle back around into being able to communicate like human beings again.
comes full circle. There's something to be said for just wanting milk, so you point at it and say, "Mm, all right, I get it."
That's how I communicate with my employees. I when we get on video calls, I will just point at the screen and go, "Hmm,
Mm.
hmm, hmm."
Funny enough, it probably works.
Well, usually they know things are in trouble when they'll send, financials to review if we're on a call and I'll look at things, and as I'm looking through it, I'll go, "Hmm." Then they know that, well, that's not good.
Oh, here we go again.
The worst one is, "Ooh." It's the open mouth sounds that start to become problematic, and, then you get into the, "What the fuck?" And then then they know that it's in trouble, and then they just log off for the day, and I go, "Yeah, that's fair." Where were we? Tax write-offs. Tax write-offs is money you don't pay taxes on. So, if we start at the beginning, you pay tax on the profit that your business makes. Your profit is calculated. Is 11 minutes too early to pull the whiteboard?
I don't think so at all.
I'm also worried that with something like this, that this is basically gonna turn into almost 50 solid minutes of pure whiteboard activity, which, I don't know, some people may really enjoy. But you know what? Let's go ahead and we'll get into it here, and I'll try to remember. We're gonna probably go a little overboard here in the beginning, and if you're just listening to this on Spotify, well, you know,
Go to YouTube.
follow along. Yeah, yeah. I was trying to say it nicer than that, but yeah.
Please.
Alrighty, we got our magic whiteboard here. Alrighty, so the tax is calculated on your revenue minus your expenses. I'm not saying that your tax is equal to that. It's basically, multiplied against this number. So tax write-offs it's just a fancy word for expenses. Now, the vast majority of write-offs are you just spent money, you don't have the money, and now you don't have to pay tax on that money because you don't have it anymore. Right. I'm afraid I'm gonna end up hitting my second rant before I get to the first one because they end up being kind of intertwined into it. But would you say this seems pretty accurate, right?
I think you've hit the nail on the head.
Alrighty. So let's go ahead and I am going to clear the canvas. And let's go to the sentence that was said, which is, I don't, that is work. There we go. I don't donate to charity at the checkout because the business just gets to take that as a tax write off. All right. This right here is a nonsense sentence. So if we go back to tax is levied upon, levied is the technical phrase. It is levied upon the profit of the business. Profit of business is revenue minus expenses. Revenue is what the business receives for services or sold product. Expenses are what they have to spend to effectively move all that stuff. So, when you donate to charity, that is not revenue for the business. The donation does not equal revenue. For the business, a liability. So the business now I'm going to assume for sake of argument that because I don't know the larger ones how sophisticated they get or using the payment processors and stuff like that. But we're going to assume here that when you decide to donate to charity, when you check out, the business actually receives that money and then remits it elsewhere. When you donate, the business has an obligation legally to then send that money to the charity. It's not revenue. They have a liability. And then when they pay the amount to the charity, they reduce the liability to eliminate it. So what this means is that, say you donate $5 through the checkout line at Walmart, all that happens with Walmart is they now have a $5 liability for charity, and then they pay that, and it goes away. Got nothing to do with the profit of the business.
It's essentially going into like an escrow account, like
Yeah.
a holding account, you know?
It doesn't do anything for them. Even so, I am gonna show this. They could technically, even if they reported it as revenue and then recorded the expense, it still doesn't do anything for them. Let's say they didn't book it as a liability and they just recorded it as revenue from charity. Okay. $5. I cannot type. $5. This is an R. Don't judge me. $5 revenue from charity. $5 in and expense from charity. Revenue goes up, it goes back down because of the expenses. It cancels each other out. So I don't donate to charity at the checkout because the business just gets to take that as a tax write-off. So the idea that someone probably means in this nonsense sentence is that somehow through tax magic, they donate and then the business gets to save money on their taxes. That's the idea. Through magic. That's how that happens. And that's not how that works in the slightest. Yeah, no, it just doesn't, like, it doesn't work that way. It just doesn't. That's not how that works. They have a liability, it goes up and then it goes down and then it clears out and it doesn't do anything for the business's normal operations. In fact, half the time it's a bigger pain in the ass because you've got to keep track of all those numbers and keep track of why is our liability going up, what's going on, and is it clearing out, is the money getting remitted, and it's just an organizational pain in the ass. There's no benefit, there's no secret benefit here for, oh, it's a tax write-off and they get to take advantage of that. Yeah, you don't know what that means. You've no idea what that means. Nobody knows what that means because it's nonsense. It's not how it works. Unless they're pocketing the charity money, in which case that's not a tax write-off, that's fraud.
Yeah, that's not good.
Yes, when you break the law, sometimes it can get a little unfair. So yes, they could pocket the money and just leave the liability there, and they go, "Oh, it's a tax write-off." Well, A, you're committing, that's fraud. That's not how it works. And also, B, that's still not technically a tax write-off. Don't be the person who types this out in Reddit comments, or I'm gonna find you. This is dumb. This is dumb. This is not how it works. This is not. There's nothing correct about this. And if anybody's got a TikTok that they've seen where oh, well, they use charitable contribution. No, that's not what they're talking about. Not at all. Am I making sense?
It's coming in clear here.
Alrighty, now we're gonna stop the first screenshot. Alrighty,
Once you
so
circled
now
it about 5 times, it started ringing in,
I have found at times that when you're trying to communicate information to people, you need about a half a dozen circles, or ask the question why about a half a dozen times, and you either get to the point or they're going to get really pissed off at you.
Yep. You'll get there one way or the other,
Yeah, they're either going to get it or they're going to get really irritated that you keep asking them, well, why is this happening? Why did you do that? And then when it eventually gets all the way back to it was their fault and they screwed up, then they get pissed at you and they say, we don't want to talk anymore. And I go, yeah, that's fair. That's fine.
It is funny though, man, the little misconceptions, and I don't know, like just the maybe go so far to call it as misinformation that you see on the different threads like that. It's kind of stunning. I think, I love seeing the Reddit content pop up like that, where people will literally just go on Reddit, read a thread, and that's their like 2-minute TikTok. There's some crazy stuff on there.
I always enjoy when you, particularly as you read through stuff, and I will occasionally check comment history and stuff like that from something where I go, It's like 70% accurate, but this other 30%, I'm just not informed in this area, so I'm not sure. And then you look through other comments and realize that it's like a 17-year-old
Yeah.
that just said that, and you're like, ah, got me again. You always forget that on the internet nobody knows you're a dog, and that dog is leaving tax advice.
Yeah.
Particularly the big subreddits has some of the worst. Usually when you get a little more niche, it gets a little bit better.
Hmm.
But I mean, it's even interesting at times. Just things that I know other professionals are saying that I just disagree with is always an interesting one. Um, that was my first rant. We'll get to actual tax write-offs here in a moment and explaining how all that works. But I don't want to monopolize all the time because I like to talk. It's about the only thing I'm good for is talking. So I want to open it up to you, Mr. Bannister. As you're in the personal finance space, and I know we've talked about this before, and there's always a good opportunity to do a little bit of venting. What are some of the misconceptions you've seen about things that really, really get your goat, as they say?
Ooh. Especially this time of year, man. There's a few that pop up like as we, as today is October 9th. So we're looking at like the personal return deadline that's next week, but more importantly what I'm getting at now is tax planning items that you're looking at before the end of the year. So fancy word for saying like get your write-offs in order before the end of the year. And I work, like you said, a lot in the personal finance space, and a lot of the clients I'm working with overlap into as business owners. So, sort of get both sides of the story on that one. And the one that really starts to get me going this time of year is when you're looking at the business and saying, like, what can I do to get more tax write-offs? And people like tend to over worry on the things that'll save you like pennies on taxes. When over here, you're totally missing the big, gigantic things that you can do for your business to save a lot more than pennies this year. And one of those
And what
things,
are those big things?
the biggest thing is looking at company retirement plans and like your 401k plan. So, who I work with a lot of the times are solo entrepreneurs. So they have a solo 401k. Like they don't have to worry about larger 401k plans where you've got employees and 500 people covered under the plan. Like it's just them. So there's two sides to that. There's one, your employee deferral. That's like the money you set aside as the employee of the company, which is $23,500 for 2025. So that's great. Depending on your tax bracket, that's going to save you a lot of money. But you also have a business, typically in your plan, you'll have a business profit sharing side of that too. So where you as the employee can contribute, your business can also contribute. And that usually happens after the end of the year. So a lot of times that can be up in the like $40,000-$60,000 range that you and your business are able to put in there, which saves you, you know, whatever your average tax rate is, like 20% on taxes. That's a rant for me because what I see a lot of the time is people worrying about these small potatoes over here saying, oh, I don't want to worry about the 401k this year. Like, we'll think about that next year. Like, it's just too much money to put in there right now. Well, you don't have to do the max. I usually encourage it if you can, but there's, just the misconception of different things where you're looking at this like sideshow over here and there's one big thing that you're missing.
So when you say that they get really focused on the pennies or the small stuff, what are some examples of that, of the things that people will focus too much on?
In general, just trying to honestly trying to overwork the system, like trying to gamify things they can buy or play around with, which is great. Like, if you say, okay, I'm going to buy an annual subscription to a software this year and get the full benefit of that deduction, the write-off this year, which that's great, but the software's like $200 for the year. So
Whoa, man, that's a lot of money.
yeah, I mean, you're saving yourself like
That's like one Adobe license.
$5.
But, Mr. Bannister, pray tell, how is that only saving us like $30?
So say you were to pay a month of a software that's like, we'll say $10 a month,
Starting to think I should have made you also pull up a whiteboard and draw this out.
right? So on one hand, you've got software that's $10 a month.
Hmm.
You could do the annual subscription they all offer and pay $120 or maybe a little less for the savings, quote unquote, and maybe you'll pay like $100 for the year instead of 12 months of a $10. And you can pay the annual subscription to quote unquote like get a bigger tax deduction this year because you're, instead of paying the $10 in December, you pay 100. So that's one thing I see sometimes, like, and it can be really useful. Like if you do that across a bunch of softwares, like you can save some money and get every dollar you can this year. But what irks me about that is when you're worried about things like that instead of, or in place of the bigger things that are really going to get you the benefit.
So we start moving our software subscriptions into the end of the year, right? And we go, all right, instead of paying monthly, we're going to go ahead and front load all this now. But it's an annual thing. So doesn't that mean that by next year, when it circles around again, we have effectively paid the same amount over the period because now you're paying annually again. Where even if you had paid monthly, now the rest of the year has gone by, you've had to pay for the subscription because we're assuming you didn't go out of business. If you did go out of business, then you probably don't have much of a tax bill to worry about because you have no money. But doesn't that just isn't it not really true tax savings and it's just more of a moving of when you're having to pay that?
Yeah, 100%. You are exactly right. You are essentially just, I don't know if redistributing is the right word, but you are redistributing when you are paying this set amount of money, essentially.
Basically, you're saying, I'm going to go ahead and pay it now to take a little bit of the savings. And then next year, I'm maybe not going to pay, or if it was something longer, and then I'll have to basically recover my savings. Mostly you just didn't spend the money at that future point. Do you think that a lot of people misconstrue timing as true tax savings?
I would definitely say that's a big misconception. There are some instances where timing changes do benefit you. So one that you actually hinted at with charity earlier that you could look at is, it's called bunching deductions. So one, like, simple example, year one, you take the standard deduction, which it's like $30,000. We'll just call it $30,000.
I think
So
it's
in
married
year
filing
one,
jointly, something like that.
yeah, it's, I think, like 29,200 or something.
Obviously, you don't deal with single people because you don't know what the actual single deduction is. So to all the single people out there, piss off.
Yeah. So year one, you would have to have over $30,000 of itemized deductions to be able to do that. So charitable contributions are one of those. So instead of contributing like $15,000 to a charity in 1 year, you wait a year, and year two, let's say you do $31,000 to a charity. That would then put you over the threshold and you'd be able to take that deduction. Timing differences like that can do it. Otherwise, you're just not able to realize the benefit of something like that. it's like there are good and bad instances of it, is what I'm trying to say. But in this case, the time in the subscription case, the timing literally is it's just the same thing. It's the
It
same
it all
cost.
it all flushes out. I think we're about getting to a good segue point where I'm about to start ranting about tax write-offs, particularly from the perspective of the financial and operational side of things. Because I can feel it. I'm telling you right now, I'm feeling it, and this discussion here irritates me to no end when we get into the discussion of tax write-offs.
Hmm.
Now, I'm going to start by prefacing this by I know some extremely skilled tax CPAs that are able to structure things in a way where it is truly advantageous. And I know that there's things that they can do that go beyond what we're discussing here. And the fact is, if you've got enough complexity going on to take advantage of that, you are not the target demographic for what we are talking about right now. If you are at the point where you are doing really, really, really heavy strategic tax planning like that, then there are things where the actual idea of kind of non-cash write-offs actually starts to come into play. Um, but do I have your permission here to start talking about cash tax write-offs and why this pisses me off so much?
I am very curious to hear what your take
Alrighty.
is here.
So, little bit of background for why I'm approaching it from this way, at the risk of pissing off any other tax accountant who listens to this. My day-to-day life is in operations. So much of what I work on is weekly cash flow, monthly cash flow forecasting 2, 3, 4 months out. How are we doing? How do we make sure that things are utilized correctly? Enough is held within savings to, meet any unexpected needs, keeping enough on hand to ensure that payroll runs, stuff like that in a lot of the day-to-day ongoing operations. That is the world that I live in. Now, here's the thing about tax write-offs, particularly non-tax write-offs. So let me get the whiteboard pulled up again. Sorry, cash write-offs, I think is what I was saying. Let's go back to our original calculation here of your tax. And I'm going to assume we're going to look at just what is the top marginal individual tax rate right now? Is it 37 or is it 39?
God, you've got me blanking now.
See, I don't do a whole bunch of tax work, so I don't have to remember that.
A 37.
So, 37. You know what? I'm going to round up to 40 here. So we're going to say we have a 40% tax rate. I'm going to keep things all cash related. We're not going to get into the accrual and stuff like that, and where things get a little more complicated, because the purpose of this is to explain to everyone why, when everyone starts talking about tax write-offs and focusing on all that stuff, it's nonsense for what most people are talking about. Not the professionals, but people. Why what
What?
most people are saying is nonsense.
How dare you?
Oh, I would be the one to be so bold to say that there's a bunch of people out there that are talking nonsense about things that are accounting and finance and tax related. 40% tax rate means the government is going to come in and take 40% of what you make. So, you make $1,000, government is going to take 40% of that, which means the government is going to take $400. This is your profit right here. This is the profit. This is your revenue minus expense. Okay? Everything ties in together. All of it is interrelated, just like a Christopher Nolan movie. Everything we do is calculated. This is your tax. You have take home of $600. TA, this is your take home. Okay? Basic example, the government has taken 400 of your hard-earned dollars in taxes at a 40% tax rate. Okay, we all kind of implicitly. Now, I am going to skip the misconceptions about tax brackets and the fact that there's a little more that goes into how tax brackets are actually levied in a progressive tax system, and it's only for the amount that you make in excess. It's never assigning the full rate to the full amount, but I'm not going to go into that right now because that's a separate one, because we're already about 40 minutes into this and I want to make sure we have enough time to get into the rest of this. So now that we all understand the basics of the government coming in and taking 40% of your money, here is what always irks me. Let's say we are looking at that original $1,000, right? And somebody goes, oh, I need to, it's the end of the year. I don't want to have to pay $400 in taxes. That sucks. Let me get some write offs going. And they go, well, you know what? I don't need a new computer, but maybe I'm going to go ahead and get a new camera for $150.
Mm-hmm.
They go, all right, we just bought it. We went out and bought a new camera for $150. We now have $850 that the government is allowed to take a part of. So 850 times 0.4 is, can I do this math in my head? That would be 10% would be 85. 85 times 4, 8, 16, 24, 30, 340.
You are right.
Ooh, God, I'm good being able to do basic math. So your tax bill has gone from $400 down to $340. So we have experienced tax savings of 40% of $150, which is 60. We pay $60 less in taxes. And everyone goes, man, that's great. Now I only got to pay $340. So if we go back to our original, before we had $600 in take home after taxes, right? We now have, after this, we have 850 minus 340, which should be 510. But Ryan, how is it that we just took this hefty write-off and our take-home, EH, is lower after taking the write-off?
Ooh, I don't. Tell me
How?
more. How
How?
is that so?
How is it I've got less money in the bank after taking this write-off? Well, here's the answer. You spent 150 to save 60, which puts you 90 down.
Mm-hmm.
You again, if somebody said, "Hey, would you like to spend $150 to save 60?" I'd be like, "Well, that doesn't make any sense." You go, "Hey, you could go ahead and get this new equipment and that'll cut your tax bill by 10%." They're like, "Oh, I could go ahead and do that." Now, here is the thing. For start, this you will never save more in taxes than you spend to get the expense, because the tax is levied on as a percentage of what the cost is. You're only saving a percentage of the cost, and we are not in a tax system that charges over 100% taxes on something. If it was, then yes, you could save more than you would spend, but at that point it just gets stupid. Nobody's going to go beyond that income.
And you're living in a country that pays you to live there at that point.
Yeah, it's yeah, we're literally taking more from you than you are making. What a terrible place. I'm sure there's a realistic example of somewhere where everything got really, really bad. So this right here is my core problem when people start talking about tax write-offs is, and this is from an operational standpoint. Now, the tax accountants, and they're not wrong from approaching it this way, will go, all right, we've got all this money. What are the things that we could do to get some value out of it and potentially take these write-offs, right? So to reduce the overall tax burden. The thing is that if you don't need to spend the money on something, just pay the tax and you'll have more in your pocket. That is the whole, oh, we'll take it as a tax write-off. It's a tax write-off. If you have to spend money on it, you are, from a cash perspective, from money in the bank, you are almost always better off keeping that cash rather than spending for the sake of tax savings, because you will not save more than you have spent. It's not how the math works.
Yeah, and it's, something I go back to is making a business decision and then figure out the tax implications of what you need to do. Don't mess up your order of operations, do something specifically for taxes, and then it screws up your entire business.
There are very few circumstances. Now, obviously I know that there are some out there. I have seen them. I am not talking about those cases. This is my usual disclaimer before we get other tax CPAs in here. Going, no, you're wrong, but these things I'm aware. I'm really
But
aware.
we're putting the rage bait out there for the tax CPAs.
Please, like most of the tax accountants are really willing to go and get into a flame war on the internet. Come on, we know a bunch. I'll throw shade
Let's
left and
go.
right because they're busy doing tax returns right now.
Strategic timing on our part.
But yeah, they can't fight back because they're too busy doing tax returns right now. And that's why we get to do recordings right now. You should not be making decisions from a purely tax perspective. Because everything to do with taxes is fractional. It's a portion of what your take home at the end of the period is. Right? You shouldn't be, if you're thinking of getting a new vehicle purely for the tax deduction, you're thinking about your business wrong.
Yeah. And, to kind of reframe it to my usual work as well, it happens all the time in retirement. Like, people are so wrapped up, and, naturally so, because taxes are a huge, probably the biggest expense you'll ever see in your life. So, of course, people want to pay the least taxes they can in retirement. But are you going to design whatever your retirement looks like around paying the least amount of taxes possible? Or are you going to make it look like you want it to look so you are happy? That's almost exactly the same thing as in business,
Yeah, there is basically, for most people, not a situation where the tax implications of something are the end all be all of the decision that you're making.
Yeah. Or like, the other instance I've seen for that, like, there are some states that don't do income tax, right? It'd be fun to live in a few of them, maybe, but if you're moving states, that's a pretty lame reason to move, is just to get zero taxes.
And never mind the fact that usually the ones with no income taxes have higher, property taxes or consumption taxes. Don't worry, the government is gonna get you on the back end. What they do is much like Pennywise. When you're walking down the road and you hear that little voice coming from the sewer, and they go, "We have no income taxes down here. Come on, come over here, take it." And then you get in, you realize, oh my God, sales taxes are so much higher, property taxes, and everything else. It's not that. So for starters, no, everybody thinks tax right. You just write, just a write off. It's a write off. Most of the time they're talking about things you got to actually spend the money, and you're still out the difference between the taxes that you saved and the money that you spent. Right, like that. That's just how a lot of that works. Are there circumstances where, yes, you can have greater tax advantage from doing things that doesn't involve cash? Yes, usually things if you're financing stuff or things like that for, equipment where you can start to take depreciation and stuff. Yes, there's those cases out there. I'm not talking about those right now. Also, if you're looking at buying equipment purely to take depreciation, you're a fucking moron. If anybody out there is going, well, I'm going to get this piece of equipment because then I can take depreciation. A, you're going to have a 5, 7, 10, or 15-year useful life on that thing. So you're going to know that ain't going to work. And B, now you got a piece of equipment. If you're not making money on it, why do you have it in the first place? So again, if you're making decisions like that, that is stupid. That is what I will tell. in much more professional terms, but have told clients, no, the idea of doing something purely for the tax purposes like that is dumb. If we don't need it for operations, why the fuck are we doing it?
And even even in some of those instances, like real estate, the IRS knows what you're doing in that case. So there's a little thing called depreciation recapture where you have to pay it back essentially when you sell the asset. So
So spoilers, if you think that you have concocted a tax scheme that nobody else has and you are not a tax CPA, you, you are overestimating your intelligence. Everybody thinks they're clever. Oh, one of my favorites. I'm sure you'll appreciate this one. I'm just going to set up an LLC and then I can start to expense things and take them as write-offs.
why didn't I think of that?
My God, why doesn't everyone just set up an LLC and take business expenses?
My
Do you
life is a
know?
business.
Dude, life is hard, and so is running a business, and so obviously I should be able to just, if I set up an LLC, then I can deduct my meals or the things that I use for the office, and I can take that on my taxes. And yeah, what's the IRS gonna do? That I'm a business, I got an LLC, that means I'm a business.
And, I think that's probably a misconception in itself. We working for an accounting firm, a big accounting firm for multiple years, we've seen things. We've seen the people who used to work at our accounting firm that now work for the IRS that is like scary knowledge of the tax code. You are never outsmarting those people on the tax code.
they are the kinds of people that truly, it's like, yep, they don't talk to a whole lot of people because they have focused all of their stat points on intelligence in the tax code, and absolutely nope, you are not going to beat them. You are so let me all right, we just figured out I got another rant here about the LLC one, because I'm going to go ahead and squash everybody's dreams here about that one of, I'm going to start an LLC and then I'll be able to take business deductions. Do you know what's going to happen? Maybe you'll get away with it the first year. Maybe. Maybe you won't automatically get picked up for audit because you've got a business that showed $0 in revenue. Maybe the second year you'll be able to get away with it as well. By the time you hit year 3 or 4 and you have not reported a single dime in revenue, but you're just recording all of these business expenses, do you know what the IRS is going to do? The IRS is going to come knocking and go, hey, what is it you do for your business? You say you're a business, what do you do? Why has nobody paid you in 4 years for your business? But you say you're a business. And then you panic, and then you have to contact a tax CPA or a tax attorney, because then the IRS goes, all of those deductions that you just took over those last 4 years, gone. Not allowed. You got to pay taxes on all that money now.
And penalties and interest.
And penalties and interest. Matt, got to tell you, the government is really good at assigning penalties and interest.
Oh, yeah. Oh, yeah.
And usually in situations like that, you're not dealing with any sorts of forgiveness because it was a first time oopsie. You're not getting out of that one. They're not going to be happy. You're going to have a very rough time. You're going to be very stressed and scared, and whatever tax accountant you work with is going to be very happy because you're going to have to pay them a lot of money to fix your fuck up.
Mm-hmm.
You cannot just set up a business or set up an LLC and call yourself a business. You have to actually be a fucking business. It doesn't. Yeah, you're not the first person to think that they can just do that and get away with it. There was one I think I vaguely remember. I think we may have talked about this before. Racehorses, I think, is one where people who just
Maybe.
own horses will try and basically say that they're like raising race horses, or there's something there so they can take deductions on their horse related expenses, and they can get themselves in a lot of trouble for that one as well, because the horse has to race. You have to compete.
Makes
You know,
sense.
you are not as clever as you think you are, and there's a lot of people at the IRS. The problem is even if they don't catch it the first time with somebody who got away with it, eventually somebody is going to do things in a way that's going to get caught. And now they're going to be aware, and now everybody else that has to deal with it or has tried to get away with it, the jig is up. You know, somebody's going to end up getting taken to court, somebody's going to lose, and then everyone else, they now know, here's the thing, it's not allowed anymore, and then they'll update the code if there was an actual loophole, or they just say nope, this is a thing to look out for, and now if you exhibit those characteristics, they're going to get you. Like you cannot this I know I rag on government employees last episode. Um but despite what a lot of people think, there are a lot of people in the government who are just trying to do their jobs, and they are good at their jobs. And yes, the IRS is understaffed right now, and with the government shutdown, blah blah blah, and all that. But if your numbers get big enough, oh, they'll get you. They will get you. They love to see those $1 million that they get to claw back in taxes, or suddenly you don't have just IRS notice problems. You don't even have IRS audit problems. You have IRS special investigators serving subpoena problems.
Mm-hmm.
That's bad. When the IRS agents show up and they have guns, you're in trouble.
You've crossed a line somewhere.
Yeah, you have really messed up. That's my pet peeve with a lot of it, is just there's a lot of people on the internet, not to rag on influencers again, but there are a lot out there that will act as if the scheme that they've got that they haven't gotten caught with yet, never mind the fact that half the time they've documented the fact that they know what's going on, they use that as a selling tool for the classes that they're selling and shit like that. And it is not that easy. You can't just write it off. That's not how this fucking works. We would know. We live in it day in and day out. If it was that easy, well, I'd still have a job because I don't deal with taxes. And you'd still have a job because your job is to help at the personal side, but even then it you know, it's not, government's going to get their pound of flesh, and you're not going to cheat them like that, because most of you can't afford the accountants to actually, structure things in a legitimate way to actually take advantage of stuff.
Amen.
Because there are a bunch of cool loopholes out there, but you need actual professionals to do that. Yeah, you would if you're doing your own Googling and don't have CPA after your name, you ain't it. Oh man, that was a little cathartic.
Glad you got it out. Sometimes you just
It'll
gotta let it out, man.
it'll eventually build up again, because you keep seeing the Reddit comments and stuff, and people just continue to talk about stupid shit like that. But
That's why we get our piece out on here, though. That's why we do this whole thing.
there will always be some people saying some dumb nonsense on the internet that we'll be able to steal and make content out of.
Yep.
Human
Yep.
stupidity truly knows no bounds. That's what keeps me in business.
Amen, dude.
Should I not be revealing that? Oh man.
Well, we covered a lot today. It actually went
actually
by
did.
really fast.
But yeah, it did. I'm looking at the time, but man, it's almost an hour already. I mean, there wasn't anything super topical that I really wanted to kind of cover, current events and stuff like that. I mean, I know we chatted.
Funny
for
enough, this one is topical, though.
Yeah, it is. It's kind of timeless though.
But yeah, it's both like like timeless and very relevant, right now at least. So
Yeah, I didn't really see any current events that I felt like talking about. I think with the exception of the thing we looked at was EA going private, just because I respect the cojones on Jared Kushner and the Saudis to diversify the Saudi state holdings outside, to diversify out of oil into video games.
well, it makes me
Man,
wonder. EA does the what PGA 2K or whatever it is, and the Saudis bought Live and started that whole thing too. So maybe we'll have a a new video game to play here before too long.
Well, probably not me because I don't play. I don't play golf video games. I
You know,
find
I
it.
haven't either. I haven't played since probably like Tiger Woods, like 2010 or something like that at this point.
I probably should learn to play actual golf. That's been something that's on my to-do list for I think years at this point. But the virtual golf, unless it's virtual like mini golf, because then that's a little more gamified. But just to me, at least, the idea of let's go have our character and do the PGA touring, and that sounds boring. It sounds more boring than virtual fishing. Woo! Let's go play golf, which is already one of the most relaxing sports out there, but now truly from the comfort of our living room or from our desk. Yeah, that's what I like to do to really wind down is
You'll
the
be asleep
equivalent of
by the
watching
ninth hole.
logging it on going, yeah, start, yay. Oh god, it was loading. But no, that it is wild though when you've got that much money like these Saudi state fund has that you could sit there and have a discussion for how can we diversify our holdings, and the answer is what if we bought a giant video game publisher?
Mm-hmm.
I
For
mean, I
$55 billion.
just an inconceivable amount of money. Uh I mean, I can't say I disagree with the idea if you wanted to really, EA puts out so much slop at this point anyway, and I think everybody hates them so much. You get into one of those weird situations where you go, "Hey, new management, maybe things will get a little bit better as they start to sell off the IPs that they're holding."
Yeah, it'll be really interesting to see like how it changes once the ownership changes, like as far as like microtransactions or how the whole ecosystem works.
I mean, it's one of those where most EA games are already so heavily laden with microtransactions and
Hmm.
the usual, slop that it puts out that you go, can they make it worse?
So yeah, can it get any worse? Like, I don't know.
I mean, half of it is they may look at it and go, can we just sell off some of these IPs to other people to, just get money from it, kind
Hmm.
of freeing up some of the intellectual properties that just aren't being used right now, which weirdly enough, because a lot of PE will sometimes do that, is start to come in and just sell off assets and flip and stuff like that. And it's one of those where weirdly, if they came in and did that with some of the intellectual properties, it could almost end up being a net gain that it's not just sitting in EA's vault, unable for anyone to do something. It would actually open it up for, new games to be produced. I don't really remember a whole lot of EA's, titles like that off the top of my head, but I know there's quite a few out there where not a whole lot has happened. We really got to work to make sure we don't turn this into a gaming topical channel. But I don't know,
Yep.
the economics of, computers and, software and all that is always something that I know is ripe for investment with how infinitely scalable software is.
Hmm.
We went into the wrong industry. I
uh,
like, have people
I
actually
often wonder
do
that.
stuff. Yeah, I guess at some point I should take better usage of my, computer science degree. Go relearn C++. That was
Sounds
my
like
closing.
a fun project.
Yeah, that's a next year project. Well, that was all. I think we kind of covered the topics I wanted to talk about today. You got anything you open? Do you want to close us out here, or you want to punt that back to me?
Hey, man, I'm good either way. I mean, I've got really nothing to add at this point. I mean, I think we did a pretty good job, if I say so myself, of hitting the big ones. And, um, you know, the big ones, I say, we did not cover everything by God in this episode because we'd be talking for the next week. So I don't know if there's any specific questions or situations that anyone has listening to this. I mean, I'd love to hear it if we didn't talk about it and get those thoughts. But other than that, man, I'm good to go.
I mean, if we pissed off any tax accountants, please leave hateful messages in the comments. It feeds the algorithm
Please,
machine, and then everybody can learn from the things that we don't know.
please tell us
Uh,
how we're wrong.
Please, and if we are legitimately wrong about things, then I would be glad to learn so that I don't make that
Yeah, I do
mistake
want to
in the
know.
future. Um, But yeah, no, as always, we appreciate if you've made it past the hour mark again as these episodes and videos get longer and longer because it's difficult for me to shut up. We appreciate you still listening. Don't forget to like, comment, and subscribe and smash that subscribe button. Fuck me. Uh, I just lost a little bit of respect for myself there. And we will see everyone on the next episode. See y'all then.